What's up, Dork? All right. Hey, Dork.
What's going on?
Oh, it's going.
Oh, dang, we got a lot of people in here this time.
Yeah.
I was expecting like 5 people.
We got like 100 people over on the YouTube too.
Oh, are we on YouTube too?
Yeah. They got it.
Damn.
They got it.
Are,
Well,
are people
that
just
way,
like listening on Discord watching YouTube or something? Or what's going on?
probably.
Just double
there's
watching to try to get our numbers pumped.
here's Jay Fresh.
Yeah, there we
What's
go.
going on?
What's up, man?
I'm just listening to the dope music in the waiting room here.
Yeah. It's actually pretty awesome. I didn't realize it was so mellow. I should play that shit every day.
So I think we should do this like in normal office hours where we let people into the room one at a time.
That's exactly how we're gonna do it.
Yeah.
I'm just waiting for them to submit their requests to speak.
Oh, I was gonna say like kick them all out of the room. You know, we have federal laws. We can't share their personal information with other people.
Oh, yeah, we can.
Give me 1 sec. I'll be right back.
God damn it, Dork.
Who are all these people?
I don't know. They're people.
I only recognize like half of them.
I know some of them.
I feel like some of them have changed their names. Like Krampus, he just showed up. Who's Krampus?
You know what's going to happen is nobody's going to want to request to speak. And it's just going to...
Oh, so they're just going to be sitting here?
Yeah, apparently.
Okay.
Well, I think what's going to happen is people are going to speak, and then we're going to hear their voice, and then we'll never think about them the same again.
Oh, yeah, absolutely.
Well,
okay, hold on. I realize I've probably
I just want everyone to know I couldn't possibly think any worse of you.
Yeah, Silly's funny. I've seen you around. C-mail, yes. Me too, obviously, yes. Oh, Keck. Okay. Wait, no. What? Krampus? Chris? I don't know. Who are you?
It doesn't. Okay, so here's how. So the thing is I bet it's probably a little scary because there's a lot of people in here, and you're going to be talking in front of a lot of people. So
you're just asking questions.
Just open up your notepad, write your question down in the notepad.
Nope.
And then request to speak, and then read it.
Okay.
That way you don't fuck it up.
Wait, why are we forcing them to use their mouths? Don't they all have autism? Isn't this like a big deal?
I guess, yeah. We could also just take things from the chats, but
no, it's a Q&A. They've got to get on the stage.
We hand them the microphone.
I don't know. I don't know what it says about me that I just don't think they can handle this level of pressure.
That's what I'm worried about too, Jay Fresh. It's yeah.
Okay, we got
so fragile.
Oh, we got one.
We got one. We got one.
Ooh, I can ask them how to say their name because I never know how to say it.
Me either.
Love it. Bring him on.
I'm gonna try it. Echo Eversky.
You're on mute. He's probably writing in the notepad first.
He also has a cat PFP.
Yeah.
I wonder if he's just not going to say anything and just troll us this entire time.
That would be amazing.
That would be top tier.
I love it.
We're talking about GammaStrike, Tom.
Yeah. Everyone just piled in. All right, now that we all know why we're here, let's see how many people pop off.
This is your chance to one-on-one with the Quants about GammaStrike.
All right, to answer the first question. I've had this moniker forever.
What? How do you say it?
Is it Echo Eversky?
It's three words put together.
That's what I thought.
Echo Ever Sky.
Ah, I'm an idiot.
I'm going to continue to call you Echo Versky.
3 words put together. Echo Ever Sky.
Nice.
Have you met our other 3-worded friend?
No.
Baby whale nuke.
That's fine. I can't afford your hourly rate to call me anything else.
Or pigeon whale prime.
Well, you're up here. So, what you got for us, bud?
Well, I guess we're all like gonna be shooters or something, because don't folks have 3 names like that? Okay, first question.
Yes.
With GammaStrike, how can this help people implement the wheel strategy?
Ooh, that's a good question.
Ooh,
And it
that's a great
does,
question.
as a matter of fact.
Yes, it does.
I've popped up a little screen share here. So everyone can click on that if they want to see what I'm looking at. Let's go to, well, you know what? SPXW is probably not the greatest choice, but
Nice.
hold on.
Oh,
There we
Gherk,
go.
make sure you're sharing with YouTube.
Oh, no. Crap.
Are we? I didn't know we were going to be doing this on YouTube.
I think it's for the non-pigeon whales to watch. If I'm correct, is that correct,
It's gonna
Gherk?
be complicated. Hold on.
No, I think this is
Did the power of my autism kill the audio?
Okay, there we
no.
go.
We can hear you.
Yeah,
Yeah, we
we're
can
just-
hear you.
we're
I've got this pulled up
nice.
on the YouTube now. All right, so to answer your question, yes, there are ideal points to sell CSPs. Based on, you know, the neutral data is usually what I use for wheeling personally. Generally speaking, I don't want to sell CSPs in a negative gamma environment. And there's 2 places you want to look for that. You want to check gamma neutral, but you also want to make sure that market maker gamma exposure. This is going to be a little bit. Some of these notations are going to be a little bit off, I think, on the YouTube side, but I can't help that. You want to avoid so you want to avoid selling CSPs in a negative gamma environment. Generally, I'm going to be looking at market maker gamma exposure over here, and I'm going to be looking, you know, at gamma neutral. They don't always perfectly line up. They're a little bit off. But I will usually wait until gamma has gone from negative to a positive environment before entering CSP positions, and then I will sell them within the negative gamma environment. And that way, if the stock falls back into the negative gamma environment, you know, I'm getting assigned at what the options market is pricing in as a lower price. Yeah, if you think of, you know, like some of the neutrals as being what the market is pricing in over time, right? You know, you think of delta or gamma neutral specifically, as where the market sees the stock headed over a long period of time, then that's, you know, the ideal buying point, sort of. And so
Oh, go ahead.
Oh, and then for, you know, for the cover call side of the wheel, I'm generally looking to sell above gamma max if possible, and if the stock is trading above gamma max, in the money, but also above gamma max.
Yeah, although that's been. Can you? I don't want to maybe. Well, yeah, I'm going to put you on the spot.
Yeah, go ahead.
I think you're a good trader, and I think we have a good product. What if we're in an environment like now where we just keep going up forever and we just hit gamma max and just grind against it upwards?
Well, you can continue
Can I
to.
interject?
Oh yeah, go ahead.
So JFresh, here's my perspective to kind of round out what both you guys are kind of saying. So I think you're both saying the same thing. So in terms of wheeling, right, when we're talking about gamma exposure, right, what you're mainly concerned about is how much gamma is there in the chain, right? How much are the market makers hedging gamma right now? Because, you have to believe that the market, like at least the market makers are protecting their risk, right? So they're hedging their gamma. So if you're in a high positive gamma environment like we are right now, what that means is that generally mean reversions will be much stronger than they will in a low gamma environment. In a negative gamma environment, there's not really potentially going to be as much mean reversion happening. So if you're planning on wheeling a stock, like selling CSPs, things like that, you would find this environment actually somewhat advantageous because it means that any sort of downside moves are going to be slower, so you can prepare a little more easily for them. So for especially for the put side, you're going to be a little bit better prepared, and not have to, react as immediately in the short term on your positions, right? You can hedge a little more softly and move in. But in like low and negative gamma environment, you're going to have these more violent moves that may end up just leading to sorts of consolidation and things like that, where your standing can change pretty quickly. So in those environments, right, if you're doing something like selling calls, you have to be a lot more quick with your risk management. But selling calls at this high of a gamma environment, it sort of lends you the same benefits as selling puts. But something to be aware of, right, is that if you're selling these calls in this strong of an uptrend, you're pretty much okay with selling, right, in terms of the wheel.
I mean, well, with the wheel strategy, you are generally okay with assignment. You want to be assigned on your out of the money covered calls. That's kind of the whole point. That way you can start doing CSPs again. So yeah, stocks can exceed gamma max, but the market maker is not actively hedging more gamma above gamma max. And so, the market maker is still trying to hedge back towards where gamma max is. And so having that persistently in your favor over the periods of time in which people usually wheel, which is like 30 to 45 DTE, is tremendously advantageous. And if the price does keep going up, you get assigned, you go find another stock, you can, if you really want to keep the underlying, you can roll out and wait for price action to fall back. I mean, gamma max will always kind of be a weight on individual equities. It'll always kind of be a weight around participants' shoulders, kind of pulling the stock down, because there's no that positive lift that you get in the positive gamma environment from the market maker is no longer really present above gamma max. Now, there are some exceptions like Reddit and stuff where the chains get split. There's some outliers, but generally speaking,
explode, right?
Yeah. So I can talk a little bit about the mechanics of that. And don't worry, Gherkin, I'm not going to give away too many secrets.
Well, we also have to make sure we have enough time for other questions. All right, is anybody?
I'll be quick. So this idea of what is gamma max? I mean, it's basically the point at which you have the most positive gamma at any price. It's the price at which you have the most positive gamma. So you have the market maker is selling into buying and buying into selling. And so that's what Dork was saying about mean reversion. It's unlikely you're going to have really strong moves in either up or down. Now, what you have to keep in mind is what are people going to do next, right? Because when people start closing and opening new contracts, everything's going to move around, right? And so what happens when people start doing that? And that's something that you have to consider as well. If you have something like, I don't know, maybe MSTR or Tesla right now, where everybody's just going balls to the wall, or like GME back in 2021. That's a great example too, where like they just keep ratcheting up higher and higher strikes, and so then gamma max is just going to rocket with everybody leveraging upwards. But a stock like Apple, where regardless of the fact that it's super overvalued right now, and
obviously,
obviously,
let's move past that. We're wheeling right now, Jay.
yeah. It's unlikely that a bunch of degens are going to come in and just start like buying the 300 strike on Apple and just blow out Gamma Max.
Yeah, I mean, Apple's Gamma Max is not Apple's super liquid. Most of the options, most of the options on it to the upside are usually sold. It behaves a lot like an index would. Generally, big participants are buying very far dated options on it. There's a lot of delta on the chain always. It's usually not very gamma heavy, so it's not like a violent stock, but it's actually great for wheeling because of all of those attributes. And if we kind of go back and look at the data and show how we would really use this, you'd be looking for these opportunities like here where the stock price is moving into a positive delta and gamma environment, and you'd be selling your CSPs there. And then you would be selling your CCs up here, and your risk of assignment over like a 45-day period is very low on both sides, and you will see that throughout the data all the way back. You sell on the move up, CSP is protected by the market maker, right? So the market maker at this point is protecting the sold put that you sold.
Just to specify, you're talking about a move back above gamma neutral.
Gamma neutral, gamma neutral,
something
delta
like
neutral. So into a positive, from a negative into a positive environment.
Yeah, and that's definitely it's a cool feature of these market maker hedges. I mean, our assumptions, right, only go so far, and for stocks like Apple that are highly liquid, where a lot of people have a lot of shares of it, these principles still hold.
Yeah,
that's where GammaStrike's going to shine, is in these really liquid options chains where there are huge institutions that do have to try to extract yield from a shareholding that, while they don't sell, returns them nothing.
Yeah, there's no dividend. Well, Apple does have a small dividend, but it's very small.
Well, it's pretty much, dude. They might as well buy treasuries.
It's below it's below inflation. Yeah,
Nvidia has an excellent dividend as well.
It was like 12 cents or something, or 1 cent.
I think it's 4 cents.
But then again, also at Gamma Max, you can see that if you're selling your CCs up here, even here where it's price action's very tumultuous, over time, that price is going to mean revert back under where you sell.
Can I break our mold here and answer Fear and Loathing in Las Vegas follow-up question in the chat, even though he didn't say it out loud?
That's an epic name.
Okay.
That's fine.
Also I love the name. But he asked, so it doesn't matter if it's positive delta or positive gamma. That is a really good question. So actually, they can be complementary to each other, and it depends on the environment that you're in. If you're on a stock where you believe that most of the puts are bought and most of the calls are sold, which may be something like an Apple normally, although right now I would say more of the calls are bought. If you're in that environment, then a gamma neutral is what you want to focus on. So a lot of these big stocks that are somewhat stable, which are the kinds of things that you would want to wheel, you want to look at Gamma Max. Now, if you have a situation where everybody's just super bullish on something and they're very long calls and very short puts, which is not as common, although anything with a meme tends to be more like that, then delta neutral starts to become more important, and a lot of that just comes from the assumptions that we make on underneath on how we calculate those two things. So those are sort of complementary in that fashion. So one is good in a very positive delta environment. If you look at the DEX chart, if the DEX is really positive, you might focus more on one or the other.
Yeah, I think that's a great way to put it. It is super. And that's why I tend to, when it comes to wheeling strategies, right? When I theory craft on this data, I tend to look for the more liquid chains where I know that I can, the institutional holdings are high, so they've got some sort of desk. They got a dude sitting at a desk going and trying to figure out how to pick up the pennies in front of the steamroller. It'll help you a lot. But and the biggest thing though is that those positions, they don't, unless there's a big panic for something, right? Which, I mean, that's why you have your tail hedges. But outside of those events, right, you're pretty much covered by just how many people are doing the same thing.
I'm gonna take one more from the chat, and then I'm gonna revert back to our rules because but anyway, C-Mill said, would love to talk about how to determine if a strike is sold versus bought. It's really hard to do that on a per strike basis, but to give yourself sort of a sense of relatively how bought calls are, for example, because calls are definitely much more finicky in terms of bought sold than puts, I would say.
Yeah.
Although right now we're in a weird environment where index puts are just sold to shit. But anyway, the easiest way that I use is just to look at the DEX skew adjusted here on this chart.
Yeah, that's
If it's super positive, you probably have a bunch of more bought calls than historically, right? So over back where it was much more controlled in August through October, right? You had a slightly negative skew adjusted delta exposure. So a lot of those calls were sold, which puts downward pressure on the stock. And then you see this pop and it starts to carry upwards on the momentum of bought calls. So that is a big indicator. Another indicator that's actually pretty good on just getting a general indication of popularity is just the magnitude of the DEX value. So not the skew adjusted, but the solid purple line. If it's getting larger, so in this case, it's the way it's calculated, it will always be negative. So if it's going more negative, it means that people are buying more calls and taking more risk on the stock. So it's a great indication, and stocks that tend to have more money sloshing around tend to go up. So
I want to also say Gamma Max. Gamma Max tends to drift away from spot when calls are being sold out of the money heavily.
yes, yeah.
So you will notice that Gamma Max will start to, especially on tests of Gamma Max, you'll see Gamma Max start to move up after it's been tested. And usually simultaneously you will see like IV10, IV30, which we have over here on the volatility page.
Actually,
down.
Yeah, go right back to the page you were just on, because I mean, Apple's actually doing exactly what you're talking about right now, and you can see it.
Yeah.
So you see how Gamma Max continues to float upwards over the last few days, but that skew adjusted delta exposure has dropped a little bit, right? That tells you that people are less bullish on calls, but Gamma Max is still going up, which means calls are being opened, right? So that tells you, calls out of the money are being open or sold to open.
Yeah. Taking off Friday. This is a great question. What are the requirements for a new ticker to be added to the GS data /analysis? So our requirements are pretty loose right now, but a good little bit of vetting you can do to help save us. Because I do this anyways. The first thing I did, somebody suggested a ticker today. I believe it was SCHD. And before I said yes, all that I did was I popped open the options chains on WeBull and I scrolled through all of the different expirations
me.
and I look at the open. Yeah, okay, it was you. Yeah. So all I did really was just pop open WeBull and like look at it and say, you know, how much OI is there in the chain? And I saw the put side was pretty dang liquid, a lot of OI, like over 1,000 per strike when you got near the money. So I was like, okay, this is looking good. So I said yes because that's enough data to glean something meaningful off the chain, right?
Yeah, if
So it's not a ton, but it's something.
another thing is you might have a lot of options, but the stock might be trading at like $1. Which
That's
means
another,
that
it's another
basically
problem.
the entirety of the chain is out of the money. And on stocks like that, like Fubo, for instance,
Yeah,
the data doesn't. I mean, it does give you some information, but that information is way less reliable. And
yeah,
hopefully in the future, as we progress with getting some quality of life things added, we will have like a ranking system. So kind of how much faith you can put into the data on each ticker. Like there are aspects that will always be useful, like IV, Greeks by strike, knowing the OI, looking at the gamma curve, things like that will, regardless of the price of the stock, will have some relevance. But neutrals specifically will have a ranking system for them.
yeah. It is tough. Exactly what Girk said, right? So I mean, I guess another thing to consider, if you're gonna suggest a ticker, like please by all means do it. But yeah, part of what'll help us kind of expedite things, right, is making sure that you look at the OI. It looks solid. You look at, like Eric said, what's the room on the chain, right? Like it does. Do the contracts go to 50 cents? And if they do, how much like OI is there versus above 50 cents, right? I mean, and where's spot? Because yeah, if there's one strike below the stock and a ton of strikes above the stock, all with a bunch of OI, you're gonna get crazy looking stuff,
Yeah.
and that's just a nature of that's the nature of how the chain is structured. So definitely something worth looking at. But yeah,
Right.
but if you see something that's not on there that should be, like where you look at it like this is popular, it's got good options. Yeah, absolutely suggest it. We're down.
In the interest of moving this along, Echo Eversky, does that help? Answer your question?
I think we did.
All right.
Let's get the circus hook out.
We're gonna get the next person up here because I'm not hearing from you.
Yep.
Well, he's good.
Thanks for the question.
I don't know how to get rid of him.
I don't know. Maybe right click him.
Well, someone asked how to make money on the Meatball.
You don't get to ask two questions.
I can leave. Okay, bye.
I feel like he's got us on like a really long delay.
Probably something like that. Thank you, Echo Eversky.
Thank you, man. Appreciate it.
I mean, make money on the Meatball. It's just the Meatball is just a way to expedite your process.
We don't have to respond to that question. It's not a valid. It was not done according to the appropriate procedures laid out in the.
Where you
not even stop answering billionaire questions. First of all, this is for the pigeon whales.
Okay, fine.
Oh, he's listening to us on YouTube. No worries, man.
Yeah, no, that's good.
Pigeon whales request to speak.
Oh yeah, pigeon whales.
Do it. You're pigeon whales. What are you shy about?
The price of it solar strike plus a camera machine.
This is insane.
Okay, I have a Gherk. Gherk.
What?
I just saw something that I thought was interesting.
What?
And I don't think it's Nuke's fault. Go to the Meatball. Look at the bullish trend. Look at that. Well, just look at how many stocks are in the bullish trend category right now, Gherk.
Yeah, no, none.
3 out of how many do we track?
Like 800 something.
Almost, yeah, but upper
Almost,
side
yeah.
It's like
800.
780.
Yeah.
Yeah, 7. And 3 of them are in bullish trend.
You know, like fucking 98% of the S&P is below its 20-day moving average right now, right?
Yeah, like almost all the
I know,
stocks in the S&P have just been going down for the last 2 weeks.
That's just insane to me that that's actually happened now.
Request to speak, you must endure the trial. Yeah, come on.
Yeah. I mean,
What's
this
everyone
is
so...
the chance.
I gotta talk to
27
you
minutes.
fuckers all day. Here we
You
go.
You get 27 minutes, and your question is probably going to occupy 10 minutes of the time unless it's really dumb. So, like, go for it. It's not even that it's dumb. If it's simple, we'll fucking help you. But
I
like,
sent Saber request, and I sent him one.
Saber, where'd you go? Well,
Faber's question is kind of something multiple people have asked about already that don't have priority status.
what about the GammaStrike?
Oh, I had to accept. Can you hear me now?
Yep. What's up,
Yeah,
man?
there you are.
Ah, perfect. Cool. So yeah, my first question earlier was the way you did analysis on Tesla to say it was going to 500. What do you see on GammaStrike? Because if you look at it, there's these large gamma walls at multiple strikes. But what tells you that it's going to 500? Like it has the possibility to go to 500.
Well, they were really, really trying for 500. They ultimately failed. But
Yeah, you called it at 440 or 420 or something, and it just shot up, right?
yeah,
I
so
see on the chain. Yeah.
if
go
you
ahead.
if you kind of look, the chain has obviously evolved a lot. I could probably go back like 5 days,
Look
and
at
you
that
can kind of
awesome
see.
feature.
You can kind of see
That was
how you can kind of see how support had built up to the downside here. Spot was at like 435. We had these two big positive walls of gamma to the upside, right? And so, upon crossing those, gamma starts to really level out. And the momentum from these going into the money is going to drive price action upwards. Right. So if you run into a situation where you're constantly accumulating more and more positive gamma on an upside move, the stock is very likely to continue moving in that direction. And it's really not going to stop until it runs into another like big insurmountable wall of gamma, which you had here at 500. So that was part of it. You also had volatility just going absolutely fucking nuts, and not just on like the shorter dated contracts, right? It was all across the entirety of the chain. So you had volatility in the 10, 30 day, 60 day, 90-day window just rocketing as people are loading up these out of the money calls. And remember that volatility is anti-correlated on equities to a point. And so volatility will rise with rising prices, whereas if volatility on an index sort of rise, the index drops, right? And so you had this big uptick in volatility all the way out on the chain. You had really long dated positions coming in on Tesla out to 500 also, and so not only do you have a lot of
Oh wait, you got to show it. How did you know they're all elongated?
Oh yeah, I'm gonna get to that right now.
Yeah,
So
sorry.
if you click on these, you can see how these are positioned, and so you had a lot of like of the 400 strike. At the time, you had OPEX positions coming in, you had positions coming in on the Leap expiry, but you also had these coming in like Feb and March. You had them coming in out in June, and then even some in December, Jan. Like there's like 12,000 calls for next December. There's 11,000 calls for next January, right? And the more you dig into these strikes, the more you start to see further and further dated strikes. And so this also means that there's a lot of vega to the upside on the chain. And so as that vega is accumulated, it's going to change how the delta reacts. And you get into a situation where that vega starts kind of squeezing, and as price moves up, vega's also accumulating as those longer dated positions move closer to the money. And that is having that's having the multiplicative effect of the rising IV applied to it as well.
Yeah, Gherkin, another way to visualize this, if you go back to the volatility page.
Yeah.
There's so many ways.
If you look at the implied volatility, you notice 4 days ago is a lot lower than where it is now.
Yes.
Right.
Yeah.
And that rise in volatility is what Gherkin is talking about, because that's what Vega sort of describes as how your delta hedge is going to change with changes in IV. So that plays exactly into Gherkin's hand. So back when he probably made that pickles pick, he probably saw how much Vega exposure was up there above those gamma walls, and thought to himself, well, if this moves up quick, right, then that support becomes even stronger.
Yeah, and again, point I just made earlier, go back, if you go to the Greeks page,
Go to the Greeks page, Gherk.
I'm working on it.
Okay.
Okay.
Yeah.
You go to the Greeks page. It's kind of hard to see because the specifically about the DEX chart. If you kind of expand it to larger. Well, first of all, just expand it in time to like the whole time series.
Wow.
So this isn't the skew adjusted DEX isn't a terribly quantitative measure. It's a relative measure of bullishness, essentially. So if you look at that dotted line and you kind of look at what it is historically, it has, even when it's been pretty bullish, it barely breaches zero. And here we have multiple times where it has breached zero quite dramatically. And then if you look at DEX, just regular DEX, the solid purple line, total delta exposure is just exploding. And so what that tells us is that people are just dejetting into calls as hard as they can, which is just driving the price up about as rapidly as possible. Then that's when you kind of look at that and say, okay, there's a ton of bullish interest on this stock, like massive. That's when you go to Greeks by strike and you kind of get a sense of where might that end, looking at both time and strike. And yeah, so that's.
So on the opposite coin, something going down the DEX, the non-skew adjusted DEX would be rising up towards zero.
Yeah.
If something's going down, okay.
Yeah.
And the gamma, how would the gamma?
No. So okay, the way to think about it is the solid DEX line. That you just think about that as just absolute value. That just tells you how much people care about the stock.
I mean, he's not wrong, though. I mean, total delta exposure will.
If it starts going back to zero, that means people don't care anymore, which means the price is probably going to deflate.
Yeah.
Right. Yeah. It's another metric to look at, right? Like if there's a ton of puts because people are hedging their stock, yeah, that DEX may not drop as slowly.
And like back to the earlier question though, and something that I should note about Tesla is a gamma, like very heavily gamma driven. So I mean, largely when looking at Tesla, I would usually ignore delta because the options are so expensive, and people, it's a meme stock. Like there's no question about Tesla being a meme stock. Whether it's part of the Mag 7 or not, it does not behave like a safe investment by any means.
Yeah, and Tesla is definitely its own entity. Historically, it's had the highest options interest by like a factor of 10x for a single stock.
There's periods where Tesla has surpassed SPY in liquidity.
It's currently like vying for it, and it's like between Nvidia, Tesla, and like SPY and QQQ, just like fighting each other for top dog.
And so what you get is a lot of short dated options, which have less delta. And so gamma is very, very prevalent. Like this is a stock you would never want to wheel because it's very obvious that all the price action is right around, or fluctuates based around the amount of gamma exposure on the underlying. And if you look at the the gamma exposure here, and it's extremely volatile.
Fuck.
It goes up, right
Yeah,
back
press
down,
check
right
DM.
back up, right back down. What's that?
I just told Jay first to check DM. We have a new feature in the cooker. I feel like can I share a screenshot of the new feature we're working on, the macro
No.
stuff?
No.
No?
not yet.
Okay, doesn't look good enough yet.
No,
No,
not at all.
it's just not ready. I'm not ready. I'm not emotionally.
You're not emotionally
It's
ready.
not
Well, Jay Fresh, check.
emotionally
Okay, then Jay Fresh, check your DM for me really quick. I was just looking at it.
It looks beautiful. What do you want me to look? We'll do
The
this
right
later.
side. The right one looks insane.
Yeah.
It looks insane, dude.
Stop titillating the pores.
I know. I'm sorry.
The things that we.
I just wish it was out because I wish we could talk about it right now because I mean this has implications at least a little bit for something like Tesla.
Saber.
Not as much Tesla as Apple.
All right, back to the because we don't have a lot of time.
Yeah.
Saber, does that help?
Yes.
Okay.
Thanks.
Awesome. Thanks for coming on, man.
No worries.
Yeah. Thanks for the question, dude.
All right. We got a bunch of billionaires raising their hands. Trash Panda. So right now, just to let you guys know, give me 1 second, Trash, before you start talking. We're just bringing Pigeon Whales on right now because they have access. And now, if you're a billionaire and you have access to the platform, let me know in the chat because I know some of you left Pigeon Whale. But we want to make sure that we get the questions by the people using it answered right now, and then we're going to keep doing these every week. And as time goes on, we will be taking more questions from everyone.
Thanks, Greg. Okay, Trash Panda.
Go
ahead. We can. What's up?
Sometimes when you're looking at a contract, an options contract on SPX or SPXW, you can see it. Sometimes it looks like it's being sold when you look at it closely, or sometimes calls are relatively expensive to puts, or the other way around. So my first question is, would it be possible to include any indication of puts or calls being cheap relative to the other? Would that be possible? And the second, if it's possible, would it be useful?
Now, just to get some context, are you mostly talking about like intraday 0 DTE or something?
Yes.
Okay. Go ahead, Gherk.
So yes, it's possible. We could design like a baseline for where calls should be priced and where puts should be priced relative to spot and implied volatility. And if they were outside of that, we could highlight it, but those moments of arbitrage tend to be fairly small unless you have an overwhelming position on one side or the other, in which case it's generally really obvious. Like you'll see sometimes like calls are just being sold really, really, really heavily, and the price on them is, the spreads are getting blown out and the price is tanking. And usually what I'll do for that is I'll just look at the options contracts chart. That usually gives you a pretty good feel for, where things are being, sold at resistance or bought at resistance. I mean, but yeah, we could look into implementing some sort of like pricing tracker. We recently in our live data that's still in development. But you guys have seen it. It's like the tick chart where you have the live data and you have the gamma and delta exposure and all of that. we added put call premiums, so you can kind of see which side is where the premium is being harvested the most. So like today, put premiums exploded in the first half of the day. I mean, there was like, I think within the first 20 minutes, there was 500 million in put premium and only like 200 million in call premium. And that was when they were really pushing to try to break free of those short put walls. And then as the day went on, the call premium started to pick up. And when the call premium picks up, calls are going to get relatively cheaper because they're getting smashed down on the bid. And then when it bottoms, you'll see put premium pick up because everyone's selling the put. And so that kind of gives you an idea. It's notional values, so you gotta. It's not really like an indicator. But we could probably, I don't know, we could talk about adding something like that. I'm sure we have the data to do it, but
I mean that's sort of what our skew adjustment in aggregate is sort of going for in a really, really rough sense.
Well, he's talking about intraday, not
right.
Well, even on intraday, I mean, one thing you can also use is a rough indication of demand, supply and demand is IV curve and how skewed it is, which will provide that as well.
Yeah.
Yeah, we'll try to have we already kind of we have some rough estimates of that. But Gherkin is kind of right though that watching the contract price over time can tell you a lot about how that contract is being traded, like especially stuff with a lot of volume. You'll be able to tell how that's being traded. I mean, if you just look at it like a stock, you would say, "Oh man, someone just dumped it right here." Right? You could. It's very useful to look at that kind of stuff.
Any follow up?
There was a second question, right?
Yeah. If second question would be if it's possible to do something with it, if it would be useful, because you guys focused on usable data, so I'm not I may be looking for just any data without focusing on usability, and you guys are at least Gherkin is way more experienced, but
yeah. So I mean, in terms of how usable understanding the options pricing is, that's really debatable. There are times when cheaper options presents an opportunity. They're pretty rare. Usually when options are cheap, it's because they're not likely to go in the money. And so in terms of like giving people that data, that's something, like that's the part that I would want to talk to like set like outside of this and have a discussion about, because highlighting prices of options that are trading cheaper than they should be is probably like kind of a trap. Like it's almost like baiting people into buying an option because it's cheap, but it's also extraordinarily unlikely to go in the money. Like it's low probability but very cheap.
Yeah, that's Gherkin's absolutely right. It's cheap options and expensive options, right? They're cheap and expensive for a reason, and it may be an overage of interest in those options, but that doesn't necessarily mean that the contrarian is going to win in that trade. So it's definitely kind of one of those games, right? But to that point, knowing whether a contract is cheap or expensive could lead you to some good strategies in terms of like how to position your spreads, that kind of stuff. But the price action of the option itself, right, is a good indicator. If you have like a really liquid option you want to trade around, Looking at the price action of that option, the volume, and all that at the times is a good way to get an intuitive feel for what those options are going to do, right? Because these big participants are going to continue their behavior. That's kind of the assumption, rather than trying to catch them reversing their behavior, because that's not the whole idea of what they're doing.
Yeah, so
yeah,
it's definitely something we'd have to have a discussion about.
Yeah, it's a huge question about all that.
I want to add some things, but I'm also trying to talk in the chat too. So let me finish this, and I'll have some things to say. I think that'll be important. So,
well, hurry it up. We're just gonna sit here twiddling our dicks.
okay.
Okay. Oh, that's it. Okay. Yeah.
Yeah. So it's actually kind of all related. So the truth of the matter is, and diehard old school mechanics folks will tell you that this isn't true, is that the price of options is driven by supply and demand. And I guess the better way to say it is just it's driven by the demand from folks who are trying to buy and sell it with the market maker. If the market maker doesn't need your option for anything, say to hedge another position it already has, it's not going to pay you a lot of money for it if it doesn't think it's going to, go in the money or whatever. If they don't need it, they're not going to pay you a lot of money for it. On the flip side, if you want to buy a bunch of contracts that it thinks are worthless, it will take whatever money you're offering, right? So there is today, because of the volume in these option contracts, there is a significant amount of buy and sell pressure that shows up in the price of the contract, right? So if you have a lot of volume on a contract, let's say let's say the SPX is currently rising, a little bit, and all of a sudden 1,000 contracts come in at the strike 5 above spot, and then the price starts rocketing towards there. And the price of the contract goes up as well during that. It's probably pretty likely that somebody's just trying to push the hell out of the spot to get it up over that strike. So, okay, so there is some supply and demand to it. Now, however, the inverse is not very reliable in the sense of saying, well, just look at how the pricing of the contracts go in relation to spot to kind of get a sense of whether it's bought or sold. There are enough idiosyncrasies. Yeah, idiosyncrasies that make it difficult to time momentum with price to get an accurate estimate of what's bought or sold. And even if contracts are being bought heavily, it doesn't mean they're all being bought heavily. There's also a lot of contracts that show up just outside of the bid ask, and those might be printing later from before they actually traded, and they were trading off, in dark pools or whatever. So any
to be fair, there's not a lot of options market dark pools, and they're
they're not huge. Yeah, they're not huge. That's fair. But any seasoned options data person will tell you that trying to do a simple momentum indication of bought sold is usually a fool's game. Just because if it was obvious, they would have banned it. And I think the biggest thing is whether the contracts are bought or sold is so valuable that they don't want anyone to know. And so they have designed the system such that the data that is shown to people is not sufficient to fully determine enough of bought soldness to take advantage of anybody, for example. Okay. However, there are a lot of, like we've kind of laid out here, a lot of these things also can apply in the intraday. There are a lot of ways to try to get a sense of what is it people are going for, right? So if the IV is really high on, out of the money calls relative to puts, that is a big indication that people are buying those. You can also look at the money IV over time. Specifically, one of the things that I look at a lot is VIX 1 day, which is kind of basically pretty close to at the money IV for 0 and 1 day options, which is for SPX essentially just 0 DTs. It's like 95% of
The only
all
problem with VIX
Bitcoin.
1 day is it's specifically 1 day options.
No, it's 0 and 1.
Is it?
Yeah.
I've noticed it gets really fucked up with event vol.
It does.
Like, just completely unreliable anytime there's a major macro event.
It does, but so for example, like, you know, I was pretty busy today, but I did kind of look at it. You can kind of tell, like, when we just started dumping at the end of the day yesterday.
I have no idea.
VIX 1 day just rocketed, which tells you that sold puts got blown out, right? So people were buying puts at the end of the day, which drove up demand, which drives up price, which drives up IV. And so you can kind of get a sense of when the price started dropping there, and then you see, you know, that explode. You're kind of like, oh, something's getting blown out. Whereas if you look at today, VIX 1 day was very constrained, elevated, but very constrained. I mean, people were clearly trying to strangle the options chain today. So you can use that information to get a sense of, you know, what are people trying to do.
Yeah.
In terms of bought sold.
There's a lot of ways to try to make interpretations.
And we're going to provide all that information, right? We provide, you know, intraday IV, and you can basically just, instead of using VIX 1 day, you can basically just use at the money IV.
I feel like most bought and sold on major indexes is going to be intuitively really obvious. You know, when you test a major resistance to the upside, right? Like, you're looking at your live Greek SPY strike, which I don't have here, but because it's not intraday. But let's say we go out to this, which is the static overnight one, and you know, you test a major resistance level, right? Like, say this 5900 level, and you start to see calls coming in out of the money at all these strikes, right? And you can use your volume indicator to look at that. These are very likely not bought. Generally speaking, bulls will sell puts in the money to leverage over large gamma walls rather than buy calls. Usually the only time you'll see call buying is when gamma is extremely flat. And they can just run the price on bought calls. That with 0 DTs nowadays, you really don't see that happen very often. I mean, you've got to have like a 150 plus BPS day to really start to see massive call buying start to come in. And you'll also see, you know, like the volatility on these contracts crush as well, which is a really good indication that, you know, those contracts out of the money are being sold. This is everyone, like, the SPX has hit a top for the day. Everyone's trying to sell calls above the major strike and harvest that premium. And you know, the same thing with a downside move. You know, you get a big, you know, I'm always like, oh, if we lose this level, we're going to fall really hard. And that's where you'll see, you know, bulls mount that defense, and they'll start selling, and they don't actually sell the out of the money put. They'll start selling the puts at the money and in the money, because they're trying to bounce the index up, right? And so
you got to be careful what your language talking about mounting things. You're gonna get everybody all.
I mean, and so
everyone's already horny.
I think that Gherk. So something about that too, right? Where that demand is coming from isn't just traders necessarily, right? Yes, you have trading desks and things like that, but when you're talking about ultra short-term moves like this, like that happen within a day, right? We're talking, market makers who have a shitload of all kinds of derivatives that they need to hedge. And when you have a move that's greater than 50 basis points intraday, I mean, in a time
depending
where
on what is priced in already.
yeah,
But yeah,
exactly.
yeah.
But it's so there's a ton of multiple levels of derivatives that need to be hedged in these extreme moves, right? And so that demand you're seeing, right, is one, especially with something like a large index like SPX or something like Apple or Tesla, you will see large market makers purchasing options or pricing options to the point like they'll be purchasing and then pricing because they have so much, excess liquidity they need to get off, that you will see this interest show up where it is unnatural. And that is definitely, with ultra short term moves, it's a huge deal. I mean, intraday humdrum stuff, you're probably not going to see that. But yeah, when you have days like today and yesterday, you will see large institutions moving in at levels that I don't think you would normally see, like a regular singular desk trader at a firm be moving into a single position. So
Yeah, and it's also hard to
comment.
say too. A lot of these really big positions are parts of more complicated positions, and if you
Exactly.
and there's
Yeah.
no
Okay,
way
this
from
is
let's
just
not get too far off track.
overcomplicating things.
Yeah.
Yeah. It is. I just wanted to point out, like, for ultra short term stuff, it is significant, but generally speaking, it's really not the case.
I do want to address one question in the chat that isn't GS based on market maker positioning? Yes, it's based on us modeling market maker positioning. Do MMs make this info available? Absolutely fucking not.
Yeah. No.
Because I mean, if you guys haven't, I mean, you all know at this point. Yeah, they don't. I use the data every day. No, they don't want anybody to have it. It is not advantageous for them to even have their positioning modeled. They would not like this. But no, they don't share anything with anyone, and even amongst each other, there is no sharing. And so, even if you're a huge market maker like Virtu or Citadel, and you say you're making the spot market on SPX, you're making the strikes $25 from spot in either direction. You have a really good picture of the spot market, but maybe you don't have a very good picture of the tails because you're not making them. Right? Or, there's a strike that you don't really need to make a lot of the market on because that's kind of where you're neutral. And somebody else is making the market on that strike. You have no fucking clue. You only know what's on your book. And so what we're doing is we're taking the aggregate of the market makers' books and we're modeling them so you guys can see how market makers are positioned overall. And make your trade decisions based off of their positioning. Knowing where they support your trade, where they're working against your trade. These are huge advantages. These are big edges in the options trading market because, there is no payment for order flow in options trading. There is no, there is no like broker bid, right? Like this isn't getting passed through a clearinghouse. The options market is kind of pure in a sense that, trades, you're interacting in the options market almost directly with the market makers. The only place where that gets a little fucked up is the complex order book or the COB. And that's because, the market maker is picking and choosing complex orders that match the positioning they want. And so you're getting, generally getting worse fills over there and at a slower pace. But anytime that you're just buying or selling a contract, you're almost directly interacting with the MM, which cannot be said about buying stocks or even in the futures market, which is almost the purest form of like individual stock trading. There are still additional layers between, your broker and it hitting the tape and you getting your fills. And there's high frequency trading that's going on there, and there's high frequency trading that's going on in stocks, but that HFT is not really possible in the options markets because they're too illiquid. So it's not advantageous for HFT to really try to take advantage, at least not in size. And so you have this kind of market where things are a lot more fair. And by getting insight into where the market makers are positioning, you're able to get like a real profitable edge against the positioning in the market. And that's what we're trying to help facilitate with this data. Panda, sorry to leave you hanging. I know we just kind of, once you get us talking about something, we don't ever shut the fuck up.
Yeah. Thank you for answering my question. I'm going to leave there.
All right, I appreciate it, man. Thank you.
Please release me.
Who's ready to get trapped up here? We got Fear and Loathing in Las Vegas.
Wait. I mean, I gotta drop off pretty soon here. I know that Windmill Willie's he had something batched up, didn't he?
He's got a question here, but he's we'll have a lot of these.
Cagey, I don't know.
He's been very, very motivated, which makes me not want to answer him. You're thirst trapping too.
I'll get you on stage next, Willie. I don't know if Fear and Loathing's joining or not. He's got it.
Lobby write-ups or pop-ups or something can be used as learning material or reference. Can you direct us to where we can read? Yeah, apparently. So have you read the PDFs on the front page? Okay. Well, shit. I guess I have to read.
I mean, well, the PDFs. The thing is, the PDFs are very mile high.
Yeah.
And this is why I suggested those like 5-minute videos, right? To just talk about like the different like the features we offer. I think just getting into the nitty-gritty about them would help a lot.
That's what we're trying to do here. That was oddly nerve-wracking.
Yeah, that's what we're trying to do here because it's so complex.
You did great, Panda.
Like, you did. Yeah. You stood there on stage silently perfectly.
Sorry we held you prisoner for so long.
Yeah, I will say I do know a little bit about teaching.
Oh wait, where's Willie's request?
Willie,
there he is. Let's get him up here.
We've talked a lot about how do we educate our users. There probably will be something at a later date, but we don't want to...
Check. Check 1 2.
We hear you.
Sir. Ooh, sultry.
Is this thing on?
Like it.
It is.
Can you hear me in the back?
You sound like the person who's on your profile picture who looks like a pro baseball player.
You do. You sound like a pro baseball player.
Hey. Hi, guys. I wanted to say, I thought the questions being asked about equities versus indexes were good, and I thought I'd point out if a lot of us are gaining experience and getting more used to this, but those that are just getting into this, remember that right now, different from the index tracking, when you're looking at equities, that's prep work the night before, the morning of. That's not streaming all day. That's not changing throughout the day. You still need to have a process for yourself of understanding your options chain, perusing volumes, OI, deltas, and whatnot. You're not going to stare at GammaStrike all day looking at Tesla and get any information you can act on if you're tracking your position all day. Don't forget that. And I find it a really good, nighttime routine to do exactly what you did on stream there and open up and chain and look at time going forward and understand what's in front of you. Yeah, but you still got to do the work during the day.
That's
what
I'm
getting streaming data on an equity. You're getting streaming data only on SPX.
Well, so as the Bitcoiners might say, study gamma.
For now, exactly right.
Yeah.
Can I fold that into a quick question as well?
Yeah,
please do.
There's a.
It's weird if you don't.
I swear if you don't. It's awkward if you don't. Being exposed to other trainings and learnings and teachings in my wanderings through all this that Gherkin knows about. There's a lot of attention paid, and whether people agree or disagree, with the 20 delta level on index chains as where had positions in the market held by dynamic hedgers might become a concern. And since we spend our day trying to find the prescription for what the hedgers are going to do next and be there, to benefit from that, are you considering, or would you consider like some method visually of perhaps highlighting where 20 delta is on your live stream charts?
So
I know that's a weird amalgamation of like pulling broker data.
I can tell you something already. The 20 delta rule it's a base rule, but it's also false. It varies, right? Sometimes you have sometimes you're looking at the 40 delta or the 30 or the 10. And those are going to be determined one by volatility, right? But generally speaking, those levels are very visible on the gamma chart. So when you're looking at your intraday gamma chart, you're going to notice almost every day, with very rare exceptions, you're going to notice that around spot, wherever spot may be, especially in the earlier parts of the day, gamma is gonna tend to drift to the lowest point. And your dynamic hedgers are outside of that. Right. And so a lot of attention is paid to these because when these dynamic hedges are breached, the index tends to move very rapidly.
Sure. It's a prescription where those doing that hedging, their need to hedge is increasing or decreasing, and they're buying or selling futures in response.
But rather than paying attention to the 20 delta move, right, you should be paying attention to where is the local low point in gamma. Where is the high point to the downside? Where is the high point to the upside? Because those levels will dynamically shift with spot.
Yeah, and you also have to take into account the fact that the people, the counterparty to the market makers, are also actively fighting against things based on their positions.
Frequently, the market maker.
Yeah, right. but like, for example, you can see it all the time. Like, as you start to approach like one of these really high upside gamma spikes, you can see people, and then based on like the IV and things, you can see that clearly somebody is selling calls into upward movement, trying to, sustain that move. And the key there is not the delta of the contracts. The key there is that they're trying to protect a certain strike, right? That has.
Well, yeah, that's. I mean,
they already have a big position on.
Sure, where the participants have, their equal strength to the dealer complex at that point. They're all warring with each other.
Yeah,
and so I would look at also, so to just kind of give you a tool to look into this a little further, I think, because what you're looking at is 0.2 delta, right? You're saying is a sort of a keystone.
Well, again, like Gherk says, perhaps there's a better model in the offing of, some range of delta plus some increase in IV. Maybe there's a GammaStrike model in the future that improves on that.
Well, I think it's better. I mean,
hold on, Jay. So might I suggest, just as a supplement to your research into this topic, you already probably have these 0.2 delta prices somewhere. Something that'd be cool for us to see.
Frantically hunting the options chain for
them.
Yeah.
You look at the chain, you look at the delta on the contracts, and you're like, oh, this one's 0.2. What would be cool to see, right, is you have speed by strike on your Greeks by strike page. I would pay attention to the amount of speed exposure at those delta keystones that you're looking at, and see how relevant they are in your existing analysis that revolves around that keys. Because I'm sure you have a system in place for looking at that stuff. See how speed by strike implements into that, because I think that's what you're really looking at, is these positions that are really exposed to changes in gamma, which is what speed is relative to price. So definitely see about integrating that. I think that would really kind of help improve what it is about that keystone.
Instead of worrying as much about 20 delta versus gamma, perhaps 20 or 30 delta versus speed as well is another.
I just think the whole piece of the puzzle thing It doesn't make sense to me. I don't know much about the strategy, but other than maybe it's just as obvious as it sounds. But
it is. It is, in fact.
If you're looking at say like an intraday sort of positioning, 20 delta. So most of the intraday positioning is cemented in place in like the first 30 minutes of the day.
Sure, and those trades, like we were saying,
the rest of the day is about managing and defending those positions. That's
sure.
like after, and so 20 delta is always moving. And so those positions that are important to people at one point, maybe when they open them, they were 20 delta, but then they become like 20 minutes later, they're 80 delta, right? So
your point earlier, those, by the time we see those trades, they've been made, they've been hedged, and they're gone.
I don't know that they're gone.
Yeah.
Well, I mean,
they've been
seeing
made.
the trade hit the time and sales. We're the last ones to the party on that. The hedge is accompanied it somewhere, and I don't feel like there's edge there. And ooh, look, a contract just sold.
So I have a
so the edge would come from, again, this is what we're trying to build here. The edge comes from taking those time and sales and very quickly incorporating that into a model beyond just generic time and sales, right? A lot of other services will give you the entire time and sales, which to me is just data overload and mostly useless.
It's completely unusable.
But if it
gets people a lot of Twitter follows.
Well, sure, but if you're taking this information in and incorporating it into a model that is now adjusting, on the millisecond time scale, or I guess tens of nanoseconds, which is what Opera provides. There's some value there, and we're working on that. But we're at Krampus. We're at what are we at? A few seconds. I think we could do more than that. We've just limited it for ourselves to like a second or so.
Yeah.
So can I just interject really quick? Gherk, I have a good example, I think, for Windmill here. So if you look at speed by strike on Microsoft, there's a lot of speed exposure at the 450 strike. And there's not, like, I'm just looking at the net right now, and there's not a lot of speed exposure at the let's just say I'm trying to find like the 20 delta range, or like 420, let's just say, right?
And I'm doing this with you.
Yeah, so good. So that can kind of tell you, right? You're looking at 20 delta. You're looking at 20 delta on calls, 20 delta on puts, right? So for like in terms of like those bands that you tend to sort of create in that range of 20 delta to either side of spot, you can see that which 20 delta do traders have more interest in than the other, right? And I'm totally spitballing with these strike prices. But I'm guessing 420 is right around 20 and 450 right around 20, right?
450 as of tonight's close. I mean, obviously, it's not like SPX. I don't have data for Microsoft right now. As of close, 17 delta was 445 calls. 28 delta.
Okay, so we're pretty close.
442.50 calls. So yeah, it's in the neighborhood.
Yeah. So but you see how. Yeah, so you see
Oddly,
how
the
like
high
how
speed strike is only 5 delta.
It's only 5?
Yeah.
What?
0.056.
No way.
Again, at close.
450?
I don't know. I use
IBKR,
and I don't know if all the market on close stuff gets hit.
Well, I'm sure you're probably looking at
or in the
all
morning.
kinds of...
I may have a completely stale delta read here.
I'm purely spitballing because delta, like the slope of delta is very different between expiries. So I'm just totally spitballing.
I'm just looking at weekly.
Yeah, so exactly. So I'm completely spitballing here. Probably longer dated is probably lower. But
yeah, tomorrow's Friday. Of course it's low. Yeah, okay.
Sorry. Yeah. So but
it's Lotto Friday.
Yeah, exactly. But to give you an idea, right, of what sort of in that delta like range that you have defined, right? What is roughly in this delta range?
If I go further.
Right, but
Jan
like,
OPEX is 37 delta at that strike. Okay.
But speed tells you how that reaction function to delta is going to change as price goes up and down.
Sure.
Right. So I would incorporate
The
that
other
into
the other thing
your
that I would
particular analysis.
warn you about with the 20, like focusing on that 20 delta, and I know why you do, and I know the whole history behind the analysis and all of that. But something I would warn you about that specific analysis discounts heavily is that the gamma environment throughout the intraday shifts, right? And so you have positive gamma moves more positive, negative gamma moves more negative, and they move more steeply very rapidly in the last 2 hours of the day.
Sure. I mean, I'll say this, if this helps anyone listening who wants to go, dig more. I don't find it terribly helpful, because times like this, 20 delta can be a little uncomfortably far out of the money for trading.
It is.
I'm endeavoring to get closer to a strike I'd like the price to move through. 20 delta doesn't always offer that, especially in low.
I would actually say that unless realized vol is significantly near or above like 16, you're probably not going to see very many 20 delta moves.
Well, yeah, and we've all
moves to the 20 delta strike.
We all found ourselves. We
crazy.
all found each other back in the days of the glorious 32 VIX every day.
Yeah,
and then we lived through the world of VIX in the single digits, and that whole that's where those two concepts kind of fell apart in my mind. Is like, this doesn't work when VIX is this low.
I would say that the vast majority of trading that occurs on SPX is 15 delta, maybe 10 delta move from spot in either direction as puts and calls are sold equilaterally at the 20 delta strike.
And to your point, I got suspicious of the whole idea when it became clear how popular selling 13, 17 delta calls and puts are.
Yeah. I mean, I would say
in that cabbage patch with those guys.
No, I would say 90% of the time the out of the money strikes are being sold and sold heavily.
Sure.
I mean, it's one of the reasons I tell people that it's when you find a resistance, when you're trying to trade reversals, it's really advantageous to buy the in the money strike, because you have less bid ask fluctuation. Like, say you test the 60-50 on SPX, and it's a huge resistance. Like, it's everyone's stacked up there. It's better to buy like the 50 put on the test than it is to buy like the 45 or the 40 or the 35, expecting that rejection and pullback, because you're going to price up on your delta on a small pullback much faster on the in the money strike than you are going to price up on the gamma on the out of the money strike.
And this all comes
the out of the money strike. You're going to wait for your hero that may never come.
Yeah. What may happen is it prices up a little bit, and some asshole comes in and sells 2,000 of them, and now you're 50% underwater for the rest of the day.
Ask me how I know.
No, we all know. Yeah. I've lost.
All right. Well, that's all I got. But thanks. And keep on. I had an idea hit me, and I put it in.
So my final remark on that is, like, for all these frameworks that show up, right, like the 20 delta rule and that kind of stuff, is with any of these things, just like triangles, there's 1,000 Wall Street bets degenerates that have the same Dorito as you. Just remember
exactly.
that.
Sure. I mean, one parting shot. I'm looking forward to some point where you've iterated past, like, the ugly plumbing, and then you've hung the sleek aerodynamics on the vehicle, and then you get into the like creature comforts and little user niceties, like I can mark where 20 delta is, or 50 delta, or 30, or whatever.
We're gonna have increase
10%.
We're gonna have something
that'll be really fun to see.
So what we have on the intraday that we're building out is the total gamma and delta exposure, the DEX and GAX for the MM, and what strike it's at. So you should be able to look at that and tell when the MM is positive or negative gamma, or positive or negative delta, or both. They're usually
Right.
very close to each other, and that should tell you most of what you need to know to pick a direction.
Because with this may be,
and that's going to be
something
on the
that's
0 DTE contract, which is what matters, right? Because
right,
a lot
that's
of
what we're
people are
trading.
giving you like that, like a gamma flip point, but it's the whole fucking chain. 1 second, retrocognition. We'll get you up here.
Where the experience of this might be well in your rearview mirror, and some people with a lot of experience, but for a lot of us,
well, like today, for instance,
we're exposed to so much information. Getting the answer to the information faster leads to faster and better execution.
Yeah. Well, for instance,
Sitting
this morning,
here searching for all of this is like, I can't tell you how many times it's like, oh, that premium's $300 more now. Well, I was off trying to decide this.
Yeah. Well, this morning, like, gamma and delta exposure in the MM, like flipped positive up at like 59.50. And by the end of the day, that flip point was right around like 5,900. Right. And so, but that becomes a really serious, like that pivot point between positive and negative gamma for the market maker is huge. If bulls can push up past it, it's extremely bullish, especially later in the day when gamma values have just, expanded infinitely. And
when they change regimes, be prepared to get out of the way.
Yeah.
Experience.
Yeah. Well, that's the beauty of it, is you can be prepared to get in the way, and we're gonna have that in the live data for you guys.
Oh, awesome!
So
right,
that'll be the next thing coming out probably. Well, there might be one other thing coming out before it, but we're working on getting it so it stops freezing.
All right,
I hope you can hear
Thank
that.
you again.
Later, Willie. Retro,
right,
sorry
I gotta
to keep
drop
you
and make
man.
Some.
Yep, go ahead. Go make some pork chops.
I gotta drop and make some steaks. I mean pork chops. It's been great. And guys, just a reminder for all the pigeon whales in here too in the beta discussion. I just want to bring this up in case anybody forgets. But please tag me, JFresh or Gherk, when you have questions about understanding stuff. Please do it. We will get back to you as quick as we can. When you just put stuff in there, we idly swing by every once in a while. But if you tag us, it shows up in our phone and all that fun stuff. So we'll get back to you quickly. So please do that. Thanks a lot, guys. I'm out of here.
I can stick around for one more question, and I'll just say I know I've gotten worse at communicating. It's been busy at work and other things, but just if you keep hounding me, just progressively more hounding, I won't get offended. So
go ahead, Retro.
Hey guys, how's it going, man?
Going well, man. How you doing?
I'm doing good. Great job on the beta launch. A lot of useful data in there. My
Thank you.
I guess question or like feature request is like if you're like new to trading, right? I just want a platform that kind of tells me the strikes and if this strike is good to buy or sell. And I'm wondering if GammaStrike would have anything like that. Like you go over your I forget which platform you use when you're streaming, but just imagine like an options chain with the strikes telling you to buy, sell, and kind of going over like when to wheel, right? I just a feature along the lines of that.
And I think I can respond to this one.
Okay.
There's that old adage that everybody knows, give a man a fish, feed him for a day, teach a man to fish, feed him for life. I think what we're really trying to do here is provide the information to people and provide a framework with which you can make these decisions for yourself. Because if there was something that was simple enough where we could just say, we figured out based on these factors, you should buy this and sell that. I mean, we wouldn't be here. The thing with the market is that there's so much data, and every situation is always just different enough that you still have to include a lot of things that we just could never know, like what is your risk tolerance? What are your other positions? What are your life goals, right? All of those things go into how do you make a decision to trade something. So I think once we start going from providing data and providing models with which you can make decisions to going to, hey, we think that you as a user should buy this or sell this, I think we're probably lying to you, and I don't want to do that.
Yeah, no, that's fair. But I think the person or the like me, for example, if I'm making a trade, I'm well aware of the max loss I'm willing to take on that contract. And like out of the platform, like speaking for myself, like really busy, right? Limited time to trade, but I would like to trade more. And if GammaStrike could just create reliancy for me, right? I want to use GammaStrike, right? And if GammaStrike can like offer this feature, it would just make me more reliant. I get the whole concept of teach a fish how to fish or whatever. I forget the anecdote, but I'm really not concerned about knowing that aspect of it. I just want to be told because, you know, lack of time, a lot of work, working long hours, and someone with that type of trading ability and time to trade. That's kind of like where I'm getting at.
Yeah, and you know, Gherkin, you can jump in if you want.
I mean, here's the thing. Nobody's ever going to be able to provide what you're asking for is basically like what a hedge fund does. You're asking for someone to lay out your buy and sells for you, give you a probability on them, and send you on your way. And you know, in a hedge fund, they're going to do that for a nominal fee. They're going to execute that trade. You know, if it's profitable, it is. If it's not, you lose all your money. That's your problem, right? Not theirs. We're not a hedge fund, at least not yet. And giving people buy sell signals is a misuse of the models that we're building for people. So as much as I do understand, like it would save you time, right? But that's what we're
Right.
trying to address. Is we're trying to build models where you don't need the in-depth options analysis, right? We're trying to build models where you can take a look at a couple charts and be like, this is a good contract to sell. This is going to be, you know,
Right.
a high probability of expiring out of the money, high probability of expiring in the money, blah blah blah, right? And hopefully that we're able to give you the tools where you're able to look at that and make that decision easily. And that's what we want to provide. We're providing actionable data.
Yeah, and I'll add to that. You know, we're here tonight, and we're trying to make this, you know, more of a hopefully a weekly thing that goes, you know, until further notice. And there are lots of obviously right now there's a lot of focus on trading intraday zero DTEs. Not great for someone like me who, you know, or you know, a lot of people here who have day jobs, but there's also a lot of people here, you know, who do other trading strategies that require much less, you know, management, right? So looking at trades on like the quarter, you know, monthly or quarterly time frame, right, that are lower risk and those kinds of things. So there are lower effort trades that you can make, and you know, if you just stick around and keep poking around and asking questions and trying to think of things that you could do, and you know, you can continue to bounce them off of us to get a sense of, you know, like wheeling, for example. We talked about that earlier. Wheeling is generally not an intraday thing. It's a lower effort thing. You might have to, you know, check it a couple times a week, or, you know, depending on what your time frame is. The
But
other
earlier,
thing,
like earlier today, we went over a very easy strategy for wheeling. I don't know if you saw that at the beginning of the stream, but I mean those neutrals give you a really clear window of, you know, when you can make an advantageous trade. without specifically telling you make this trade, because we would never do that.
Right. No, like that's what kind of got me thinking about this question. Like instead of looking at what is if it's a gamma negative or gamma positive, when to sell this put or when to sell this call, just some type of like notification, be it on the option exchange, like, hey, it's a good time. And that's kind of like what I was kind of alluding to.
Yeah, I mean, setting up like alerts with parameters that you can set yourself is definitely something that we want to do in the future. It's a little complex, and we have a lot of other stuff to build first, so it's not super high priority. But it will be something that we are going to add. So you'll be able to be like, when Apple goes positive gamma from its current negative gamma state, I want to know, because I want to sell CSPs on it, right?
Yeah,
and we'll set that up so you can set an alert there, right? And then
we're very aware. We're very aware of the fact that as our database grows and as our survey of stocks grows, that just finding opportunities becoming difficult, and that's kind of why we released the Meatball. Because that's one of our efforts to try to just say, hey, which options chains are doing interesting shit today, or over the last few days, and then go take a deeper dive, because you can't survey 800 stocks every night. It's just not possible. So we are definitely
says you.
Yeah, well, some of us try to sleep, although I only got about 4 last night. But yeah, so we are sensitive to that. Obviously, like you said, it's a little lower priority. The intraday challenges. Intraday is exciting for a lot of reasons, both on the trading side, but also on the back end side and development side. It's just a cool problem to work on, and once we get that finished and nailed down, we can start cleaning things up and thinking about usability and other things. So yeah, we definitely will continue to provide those. And I just want to say one more thing about like the GammaStrike. Even though we're still in beta, we have already kind of set up our pricing schemes for the different tiers, and we wanted to make it so that it wasn't just simply like good, better, best, and then try to just like nerf the good and better to sort of force people to just all buy the best. But there will be a tier. Obviously, it doesn't apply to beta users because they get the beta price for everything forever, which will be lower than the than those. But there will be a tier that doesn't include all the intraday stuff for people that don't have time, and so it will just have more of the historical information and other things. So there'll be less clutter, and we will over time try to develop tools specifically for each tier that will kind of meet those people where they are.
Yeah.
So, but these are all, there's only so many hours in the day, and we build what we build.
Cobra, I see Cobra in chat wooing. Cobra, if you don't fucking sign up for the beta soon, I'm pulling your shit.
Oh, you didn't even sign up yet?
No, the
fucking
cheap bastard. Fucking accountants, man. He just keeps losing all his money out of the money SPX puts.
Did he buy any SPX?
Popcorn Trader hasn't signed up either. Popcorn Trader had a question. Okay, retrocognition. Well, I hope we helped with that a bit.
Yeah, no, you definitely did. Thank you very much for being patient with my question.
Yeah, no problem, man.
Really appreciate it. Oh, one more thing though. One more thing.
Yeah.
How was that steak? And I'll leave you with that.
It was amazing.
All right, awesome. All right.
Thank you so much, bro.
Okay. Okay, now they're all fighting. Now they're all fighting in the chat. Should we just end it early and just have them all goon for a week?
Well, I wanted to answer Popcorn's question. We're gonna have to bring it. Well, well, you don't if you don't want to hang out, you don't have to. But Popcorn did have a question about the Meatball, and he wanted to know how it predicted VIX going up.
Oh, I don't know. I haven't really looked at it. I built it, and I hear when I come up for air and ask people, "Hey, is this thing doing anything useful?" People say yes, and then I just
So
go back in my hole.
VIX moved to the top of the bullish trend the day before the FOMC meeting. And I mean, there was a lot of indications VIX was going higher outside of GammaStrike, but it's basically just like TA on the VIX. It's just saying like VIX is going up.
Kind of is. Oh my God. I literally built something that does TA on the VIX. Oh my God. I'm gonna go.
You did, and I got to show everybody in front of everybody that you built that, which is priceless.
Oh my God.
JFresh does TA on the VIX.
I do. Every day. Every fucking day.
Programmatically. I don't know if I can ever let you live this down. I need to tell your Twitter about it.
I just can't. I'm like literally going red in the face, and there's nobody in the room with me.
I fucking hate this. Popcorn Trader's so bad. I mean, it's not right. There was a structural shift in the VIX options chain over the last couple of days, which we can look at. You know, goddamn. What's refresh without hard refreshing? What's the key for that? Just F5, right? I think it's just F5.
Every time the refresh doesn't work, I just yell at somebody about it. And
it's like there's like Control F5, and you can also just hit F5.
Oh,
so VIX moved up through VN like a couple days ago, and this is where we saw it pop up on the thing. And then, you know, proceeded to just fucking rocket from there. But yeah, I mean, VIX moved above its Vega neutral.
Yeah.
So there was a
little bit of survivor bias too. I mean, there's lots of times where it trends up and then just doesn't do that. So,
are there?
But like I said, yeah, I mean, right next to it, right in November.
I mean, it still broke Vega neutral. It didn't. Yeah. It still broke out.
The point is that it's the way that it was designed is it's supposed to just figure out what are the things that are doing something and what are they doing.
Yeah.
And so yeah, at that time VIX was doing something, and it turned out it then went on to do more things.
Gamma moved positive on the VIX for like the first time since November, so that was exciting too. But no, VIX is just it's not volatility, it's just a bullshit CBOE product that measures out of the money spreads. So it's got an options chain that you can trade. It's just like
it's
any
basically
other,
like 15% higher than at the money IV 30 days out, roughly. Well, it's basically at the money IV.
Yeah. Yeah, but not really. No, I mean really.
Options chain is fucked.
You can't trade the chain.
Oh yeah, VIX VIX options, it's not that they're fucked, they're just not very big.
No, they're just oversold. Every strike is so oversold that the at the money delta is like 0.1.
Yeah, I mean,
there's just like no fucking bought options on the VIX at all. Like I said, fucked. Yeah, it is fucked.
Sure,
but when those options go in the money, they pick up delta less fucked. And when the VIX becomes less fucked, it goes up really fast. I mean, it essentially does what GME does, right? It squeezes all of the covered call or all of the sold calls. and then everybody piles in and shorts the vol on it and like pushes it back down into the ground again, and then eventually that pops. And who bought 100K in VIX options that went in the money? I don't know, and it didn't prompt. Yeah, there was some dude who bought like a shitload of like 22s on the VIX, and they were like $5 in the money, but they still had like 0.3 delta. Fucking still worthless. They didn't price up at all.
Yeah, why would you? I mean,
or he was $1. He was $1 out of the money. Sorry.
Oh, gross. Yeah, VIX is I don't know.
Most traders who trade vol trade VX. They buy and sell spreads on VX. I don't really know very many traders who trade vol that trade actual VIX. VIX is just like heavily sold by institutions.
Yeah, it's definitely VIX futures and SPX, and then ES. Those are more or less dictating what the VIX does than anything you would see on the VIX itself. The VIX options chain is not big enough to dictate anything.
The options chain on VIX is usually gigantic. It's usually got like hundreds of thousands of calls and puts on.
Yeah, but they're not worth very much.
No, they're not worth anything.
Right?
They're all sold.
Look, you're talking about like $6 billion. That's fucking nothing.
Should I listen to the Meatball about VIX or no? I don't even know why I care. I mean, it's not the Meatballs. The Meatballs just like these are stocks to look at. It's not like buy this, sell this.
Yeah, it's literally just like if you're sitting at your computer and you say, which 20 stocks should I look at if I'm interested in trying to find some
Meatball is
some stock that's gonna go up, and then or that is going up, or that might go up more, right? And then you go in and have to do a further investigation. Like the Meatball by itself is not enough information to do shit.
Yeah. They just fuck the VIX overnight so you can't cash settle them. Yeah. Anyway, I told you a week and a half before that vol was cheap. I was like, oh, look, Vega puts. Awesome right now. I bought Vega puts. I told you, Popcorn.
No.
Yeah. And I was like, I'm going to buy Vega puts. And I told everyone. I bought Vega puts. Look at Lit Spaceman. He bought Vega puts. Chad.
Look at you. Alpha Chad.
Get Popcorn on the mic.
Sigma Rizzler.
We have a lot of banter. I also told you I was going to short Carvana. Look where that is. We're going to talk about omniscience. All right, one more caller. Who do we got?
Yeah, we got to wrap this up. I got to put my.
I'm not fucking talking to Greg. He's Canadian. Nimrod's daughter. What's up? Just so you know, you're muted.
Oh shoot! Yeah.
I am unmuted now. Sorry about that.
No worries.
I'm muted now. Sorry. Oh, now I've got to mute myself in the background so I don't make myself crazy. There we go.
Everyone's gonna know you're a female now. Now you've got the entire pickle jar gooning to your voice. I hope you're prepared for that level of fame.
I'm okay with that.
All right.
So just wondering about the volatility aspect of their option strat. But is there any way to kind of calculate or have the app calculate volatility crush for us over the day so we can kind of see, like, if I hold this for an hour, it's probably going to be less than half of what I paid for it?
I
don't know if that's possible or not. And then I also had a question about tiers, but I'll ask that afterwards.
With God, all things are possible.
That's true.
I haven't really thought about a way to express IV crush in a...
I don't really know if there is a way to express IV crush on the intraday and indexes because it shifts, right? You get crush on the opposing position. As price moves up, you'll get crush on the puts because they're being sold, right? That's what you're experiencing. And as price moves down, you're going to get crush on the calls because those are
Do
being
you
sold.
have the data though?
We do.
I'm kind of okay. Gears returning. The answer is right now no, but I'm intrigued. You've piqued my interest.
Well, good. Yeah, I've looked
yeah.
up how to do it before, but it's like incredibly complicated. It's like, oh, there's too much math. Goodbye.
Yes, there's some math involved. Not that
There is
much.
math. That's the best part. It's the math.
Yeah,
Well, I
don't know if there's that much math involved, but yeah, you want to avoid buying contracts when their IV is peaking, which is probably more what you're experiencing. Is, you know, the desirable contract is going to be bought, and that's going to raise its IV, and then that contract rapidly becomes undesirable, and then people sell it, and the IV crushes. We probably could track that. We're going to need to build tools that have like per option granularity, where you can like look at your contract with those tools. We don't have those yet. That's going to be like more advanced stuff that's going to have to come later.
Okay, that makes sense. Yeah, I had another part, but I've forgotten now. But anyway,
you had a
also
question.
Just wondering.
Oh, sorry.
Also just wondering about the tiers a little bit because, you know, can you scale it to intraday data, but for people that only have one full port?
So the way we want to design the tiers is that, you know, you're gonna have the people who don't need to look at data very often, like people who are like long a lot of equities, and, you know, or people who are wheeling. They only really need to check like data, you know, maybe every night if they're fastidious, but maybe more likely they'd be checking, you know, maybe a couple times a week. And, you know, I think our lowest tier is going to really cater to those types of traders where, you know, they're just managing a large portfolio. They're selling longer dated like CSPs, longer dated covered calls, and they just want to know, you know, they want to check in intermittently and be like, am I still safe? Okay, cool. And that's really it, you know, just portfolio management stuff. Then, you know, our middle tier, we're kind of targeting like swing traders, and people who are doing deeper research into stocks. We haven't added some of those features yet, but we intend to add, you know, research features, so like you would have on, you know, TradingView and stuff, where you can look into EPS, cash flows, like liability, stuff like that. And you can, you know, really start to like scour around and do a lot of research. And this is somebody who's actively like building portfolios, building positions, swing trading, and they need to look at that data a little bit more often. But they also need additional tools that somebody who's already got all the stocks they want to buy, right? And then, you know, for our top level, or you know, our final level, we want to have intraday stuff, intraday tools, live data, you know, our intraday gamma and everything. And we want to have that on not just SPX, but like we eventually want to move to like QQQ and SPY. And then, you know, then we want to start to move to like equity options that are really heavily traded, like Tesla and Nvidia, and get live data on all of those as well. And that's, you know, where we want to focus really on day traders, people who are, you know, rapidly shifting positions around. They're not holding anything long term at all. And so that's kind of how they're going to be broken up.
Okay. So no poor degen level that can, that can get the live stuff.
Not as of yet.
Okay.
Well, we'll see where the competition takes us. We plan on we're going to be fucking a lot of business models with this. And if they try
I'm really curious about what's going to happen with that, because it just seems like you guys are going to be the most hated men in the country by all the hedge funds.
Yeah. Well, at least all of the I just want unusual whales to hate us, then I'll know we're onto something.
I just want to put unusual whales out of business because
Yeah.
everything they have sucks. And I've paid for it before, and that makes me angry. So it's like a spite trade, mostly. We're just building this out of spite because all the other data services weren't good enough.
I'm very happy with that. I really enjoyed watching it grow.
Thanks.
That's what she said.
Oh, shut up. Okay.
Nice.
Walked right into that one.
Also what she said.
Yeah. Anytime you need to talk to the only female on the internet, you know where I am.
Thanks.
Also,
Thanks for
why
helping on.
is VWAP
What?
is VWAP on the purple hat backwards?
What do you mean?
What?
It's like shows in mirror.
Oh, because I'm on a camera.
Oh. And it does your little graphics backwards too?
Mm-hmm.
On YouTube? That's so weird.
Wait,
Yeah.
so when I see you in real life one day,
I'll be reversed.
that's gonna be so weird.
Yep.
Oh, that
I
is
still sometimes I think about how tall you're gonna be and how that's gonna be jarring for me because I only ever see you seated.
I'm not
think we should have-
like a freak. I'm only 6'3".
I'm like 5'9" on a good day. I'm like a low gravity day.
When the tide's just right.
Yeah. When the moon Yeah, when the moon is pulling on me just right, I get that extra eighth of an inch.
No, I think we need to have some kind of lottery for guessing Gherk's real name before this goes public, because assuming you will eventually be on CNBC getting interviewed, we're going to know your real name. So whoever actually
I'll
guesses
only
it-
agree to be on CNBC if they call me Gherk.
Yeah, they have to.
I'm already
Actually,
I'm already in the process of legally changing my name anyway.
A CNBC commentator actually wants me to talk to their clients, and I think I'm gonna say yes, but only if you address me as Dr. Gingerballs.
Well, that'll make them blush.
Is it Samantha LeDuc?
No.
Oh. Will GS have paper trading? No. It's not a brokerage. It's you'll actually. Well, you don't have to hang out if you don't want to. I'm just gonna read some stuff from chat. Do y'all actually need cash or you Gucci? Popcorn Trader's trying to get in on the ground floor for some equity.
We're good right now, but we'll let you know if we should.
When can we buy shares in GammaStrike? Early. Okay, that's multiple people. You'll always be Gherk. Can we invest in GS?
What
we'll
was
see.
your question, Greg? I'll answer Greg's question, and then I have to leave.
Thanks, guys.
All right, I'll let Greg on the stage. No problem. We'll see you later.
No. Just type it. I don't want to hear his voice.
No, he's Canadian. We have to hear his voice. I want to hear how thick his Canadian accent is.
I don't know if it's that thick. You
guys
hear me?
Are you going to apologize to us?
Speak louder. Are you like
No, I'm not
hiding in the closet of a daycare?
He's using, dude. Come on, man. He's clearly in the tundra, using Elon internet.
That's cool.
Oh, okay.
Okay, so my question for you guys, it's the biggest softball, so you're welcome. What are your favorite features about GammaStrike?
Mine currently, I really like the vol tools. I think we've got the way we display volatility and the way you can kind of filter through it right where we want it. For me, that was a really annoying thing that I couldn't find anywhere else. At least not the way I wanted it, the way I wanted to use it. And so being able to build that out was pretty fucking awesome. I mean, all of this is how I want it. And so, it's built for traders, by a trader, to be intuitive, to be easy to use, to be able to, systematically sort through your trades and move through the data sets in a way where you can build a thesis very quickly about a stock without wasting any time looking at a lot of bullshit like other places. And then the live data shit is just fucking phenomenal. And we've got a little bit of that in people's hands, but the more of that we get into people's hands, it's going to be exciting.
Me too. I'm not correcting him. I think it's fair to say he built it. I mean, he didn't build all of it. None of us built all of it. But yeah.
Yeah, but I got to like
anyway.
stick my face into all of it.
Yeah, unfortunately, yeah, it all has to look like the trader wants it, which is good. It's ultimately a good thing that we have a trader telling us what to do. But anyway, I'll try to stick to stuff that is already released to beta users, so that I don't goon you all like Gherk just did. But I think my favorite thing about the platform is just how much data we actually have. Like, it doesn't seem like it because we've compressed that data down to certain visualizations, but we have a shitload of data. I mean, we have basically the entire options chain end of day for like 3 years back in history for like 800 stocks, which is like 95+ % of the entire options market. And we actually want to go farther back than that. And at the end of the day, we're just going to have this insane data set that we have pretty much, very easy to access and do all sorts of crazy things. Like, I used to be doing a lot of this stuff like 2 years ago. I was doing it all with like CSVs that I was updating every night on my computer, and it was a mess and it was awful and slow. And now we have this, wonderful database and we can grow into it. And yeah, that's what I love about it. Back end stuff.
All right, cool. I just wanted to say thanks, guys. I appreciate. It's been probably what, like 4 years, 3.5 years now.
Almost 3.5.
Like I haven't made any money, but it's been awesome. So thank you.
Thank you so much, Greg.
All right, and with that, I'll leave it to you.
Yeah, I'll say that I'm not trying to take credit from the guys who did the dev work at all. The countless hours put in by them are unsurpassed. But I have been with them every minute that I could be in shaping this, and so is JFresh in the ways that we can. Because we do have a vision for how this platform works and how people can integrate it into their trading, and adhering to that is a fucking pain in the ass. I know you do.
Yeah, we're all very opinionated and unyielding, and what ultimately comes out of that process after we're done yelling at each other
is cool shit.
Yeah, the stuff that's pretty tight. But yeah, the sausage gets made through much fighting and gnashing of teeth, and everything has to be just. We fight over like fonts, like literally everything.
We actually had like a 3-week long fight. Like it was actually it between me and you and our DMs, it almost turned into a real fight about the logo.
Oh, with like the
we were
Jamaican
getting
dildo?
Yeah, we were getting really pissed at each other.
Yeah, I would not have. But you know what came out of that?
An awesome logo.
A much better logo.
Yeah, well, that's just because you pissed me off enough to go make another one.
Yeah, thank God. Oh my God, the Jamaican dildo. I would still fight you about that if that still was a thing. I couldn't do it.
The logo needs reworking. Wow. Unbelievable.
I don't understand how.
Ban.
I just think about how great it would look on a black hat and a black t-shirt.
Yeah, well, I'm getting the merch shop stuff set up.
You gotta.
Yeah. I mean, not for anybody else, just for us.
Yeah, with those. I guess Diddy is out of fashion, or was it Kanye? It's Kanye. The white Kanye glasses with like the little slits in them.
Oh, those are still cool.
That would look fresh.
Yeah. That'd be awesome if we could get those like spray painted with the GammaStrike colors.
Ooh.
Right? Oh, and then we could just wear those whenever we do any live interviews or podcasts. Or anytime we have a photo op.
Okay, that's my favorite thing about the website. Then is color coordinated merch at some point in the future.
Popcorn says, "Let me know if you need me to work as customer support. I'm great at hanging up on people and telling them to get fucked." Perfect.
Just call the new 1-800 number that OpenAI released. You can call their chatbot and do something with it.
What makes them? Oh, here we go. One last. You don't have to
Alright,
hang
fine.
out for this shit. Why are the Meatball stocks your go-to 0DT suggestions and pickly picks? What makes the Meatball a great indicator for 0DT plays? Because we're looking at stocks that are at the extremes of their options chains, and thus have the potential to move a significant degree over a single day.
Yeah.
Oh, look, Popcorn Trader's
honestly,
already telling people to fuck off in chat. It's perfect.
Yeah.
Maybe we could just distill that same attitude into a chatbot.
All I will say about the Meatball indicator is every time I ask people like how it's going, people are like, "Yeah, it's great, it works," and I'm not exactly sure why. I mean, I know why I built it the way I built it. I didn't expect it to go as well as it seems to be going with no further intervention. I've been trying just not even think about it because then I want to tweak it, but people seem to be happy with it, so I'm not going to touch it until people are like angry about it.
It might still need some tweaks, but we'll mess around with it.
Maybe, yeah. I'm going to wait until people are like holding pitchforks and threatening me.
I've got a
right
pitchfork
now,
somewhere. I could threaten you if you want me to.
I don't even know what to say. All right, it's been a long day.
All right, man. Have a good night.
Yeah, I'll see you guys if I don't see you on Sunday, which I should. I guess what next week's like the day after Christmas. I don't know. I mean, fuck it, I'll be around. Whatever.
Yeah, we'll see you guys all next week for the next edition of Hour with the Quants, or 2 hours with the Quants.
Yeah. All right.
All right. Everybody
Thanks.
have a good night. Thanks for coming on, Jay Fresh. Later.
Yep.